Okay, guys, I'm hoping you're still there, and I'm hoping you can see. Maybe we can get started. Oh, this is ridiculous. Ridiculous. So, sorry, Bobby. Sorry, Pete. I know we've probably lost a few now. Anyway, we have liftoff. You're right, mate. You're right. God, my head's a bit sore from headbutting the wall. All right, so it's a delayed start, but we'll just keep going anyway. We'll get through it all. If you have to go, that's fine. I understand it's going to be when I get it together. It will be at 12:30 on a Monday. We'll do the same thing. So yeah, I plan to just continue on. Anyone that was with trade set up previously, it'd be the same sort of thing, same scenario. I'll be going through the live stream. Sorry, I'll be going through the 5-minute trading day. I actually just traded that when I was going to go live, so it turned out fine. Which probably about 30-second trade, just under a minute, and it worked out good. I don't even know where it is at the moment because yeah, I had to close everything down. So just give me a second. I'll open it back up at the moment. Let me just get a few things open while we're talking, and then we'll get up and running, and we're going to talk about just the usual. So I've got some shares I'm going to have a look at. Where am I? And we'll go through. So to start with, I'll go through the 5-minute trading day. Anyone that's interested in that, just you bear with me, and we'll get into that now. And then get up a chat, and then we'll have a bit of a chat about that. What we'll do is just go over the current markets. I think it's been a while since you've heard me rant and rave, so we'll get onto that, and then talk about ASX list I've got going. Oh God, that makes me feel stupid, doesn't it? So, all right, so you can hear me. Let me just delete a few things. All right, so that's all good. So you can see what's on the screen now. You can see that's the Hang Seng. So with the new TradeTheStructure format, I keep saying the right thing. TradeTheStructure format. What I'll be doing, I've got a subscription members area, so you're more than welcome to jump on there. With the 5-minute trading setup, the idea is to, we've got the other platform, the trading platform that we're trying to promote. So the idea is that if you want that and you want something to use it on the platform. You trade it on the platform. Sorry, just sign up an account, let me know, and I'll send you off all the details for trading strategy. So today it's going very, very well. All that issues. The last couple of sessions, I'll go through today's trade. Last couple of sessions, so it's just, what I'm worried about is I'm trying to get a couple of levels for certain reasons, get my levels all signed up, get them all ready to go, and then just trade off those levels, looking for a particular reason why it's going to break. And you're not looking for any massive gains. So the idea behind it is to take the opening volatility. Now, as you can see, I was short before, knocked off my 30 points, but only because, normally what I'm going to try to do, if I think it's a particular structure, like this one, for instance, this is a great selling opportunity. You can see it opens down, chops around here, and it comes down. You've got the shoulder, which we talk about, through a level, this 25, was it 25,405 level? Okay, so structurally that looks pretty good to me. So what I would normally do is trade the strategy as a separate order, and then trade it as I see fit with a separate order. But I didn't today, which would have been just a short, and hopefully try to hold on to that and try to pull out 100 points. So it's only a 35-point gain, I think, on that, on the strategy. Short and sharp. This little spike through got me in, got me out as it kept going down. Okay, that's all done. But you can see that it's just kept going down, and really, when you're trading the Hang Seng, you're trying to trade level to level, which is important. We also do this strategy. I'll do it on the Hang Seng all the time, each day. So that's opportunity each day. Generally, you've got to wait to see what the market gives you first before you start to dive in left, right, and center. But there's particular parameters around that. Like I said, I know a few of you have got the PDF already. I don't know. I know, Pete, did you trade that this morning? Did you have a crack at that? It worked out fantastic. On Friday, I actually traded it as well, but I got my order so, I'll just have to get back to it, so stuffed up that I didn't get that second. Here we go. Now, where was it? So I took this breakdown as well. So a great little trade in here. It didn't, and I did have my second order, which I just couldn't get it on fast enough, to be honest. So it's working really, really well. On the Hang Seng, it's giving us some really good kick. I mean, it's normally a one-to-one trade. You could go more. I mean, by the looks of it on the Hang Seng, you could probably, and that's why I like to have one separate and one trade, because sometimes you can sort of see it's going to go in a certain direction, especially in the Hang Seng. It starts to pick a direction early, and it'll go in that direction more than just your 30 or 40 points that you're trying to nibble out of the market. Okay, you're trying to pull out with the strategy. So yeah, really, really good. Yeah, so what we'll do, if anyone's keen on that, obviously it's there's a few conditions, but if you got all that, you get it off. What I'll do is send you off to PDF. You've got the results online. You can see on the website, TradeTheStructure.com. Jump on there, have a look around, see what it's all about, and if you're confident and you're happy, just open up a TD account. Now it is what do you call it? Regulated overseas, but it's the exactly same platform. It's regulated in Bahamas, the platform itself, but all the funds are held in the UK. It's exactly the same platform. Okay, and we're only doing that so it's got, you can offer better margins. There's better regulations overseas. I'm a bit of an advocate for higher margins. I don't think it's, with asset cutting down on the margins on your CFDs, it's got nothing to do with helping retail, in my opinion. And margins is not the issue with traders. It's traders are the issues with traders. It's got nothing to do with how much margin you can put on. I don't think anyway, because I don't ever trade full margin on my account anyway. It's just pointless. I trade with regards to my risk parameters. So anyway, have a look at that. Jump on the site. Once you're up and running, just email me off, and I'll send you out the details. We'll be talking more about this online too. I'll be doing more and more videos on this, how to explain it, and I want to start doing a stream when it kicks off, just to run through. So anyone that's actually doing it, we get that group put together. I'll set it up, and then we can run through how to put it on, what to look for, and the intricacies of the actual strategy, because it's not just a straightforward thing. There's going to be times when you might be able to go for a lot more, and you might really want to push it a bit more. Okay, so we'll talk about that down the track. So you can play it on the DAX and the Dow, as you'll see, which I do the DAX a bit because it's sort of my time zone, but the Dow's starting to get a bit late with the change in the time zones, daylight savings. Anyway, enough of that. What we'll get onto now is the overall market. So I'll bring that up. I want to go to a 30-minute charts. So that's the Hang Seng. Most of the markets at the moment are pretty bullish, and it's all based around, like we've always said, the US dollar. When are they going to take off the turn the taps off for the actual for stimulus in the US? Now, talked this morning at the BOE. I can't remember who it was. The head of the BOE was talking about it's going to be sooner rather than later. The Bank of England is going to raise rates, so they're going to be the first major. We had New Zealand raise rates, and their CPI come out this morning a lot higher than expected. So, inflation in a lot of areas getting out of control, and they can't just leave it. They can say it's transitory all they want, but when it sticks around, they have to do something about it, because that's their mandate. Central banks are mandated to keep inflation under control. Now, if it's caused by certain things that you think are going to change, that's just something they have to deal with. And they could leave it as long as they want, but oil's going up, you've got energy costs that are really adding to the inflationary pressures around the globe. And then also, they just keep stimulating the markets going nuts. So low rates, no rates in some places, no interest rates is really stimulating inflation. They're going to let it go higher than they normally would, but it's higher again, it's higher than that again. So UK is now sort of pushing the corner where they're going to have to do something, and then US I can't see being far behind. So I think the markets are going. We've got earnings in the US; they've gone a bit nuts after earnings. Well, it's only just started, I know, but the banks are just coming through. But they can't brush aside inflation, because it's the cost of debt is going up. And now, if you read the news, they're saying, "Oh, it's going up because of a good economy." Now, we've known that for a long time. They've all known that for a long time. And it's been factored in, I think, a lot, over factored in. So we know that the rates are going to eventually, they're going to turn off the tap. Rates will start going up because they have to, just to cool out inflation, and then see how it goes. But I do think they're getting overcooked. Let's go. That's the Hang Seng. The Hang Seng's sort of broken out that longer term, not longer term. We'll just get onto the dailies actually. Hang Seng's got their own issues, obviously, but I think that's getting sorted out bit by bit. I should delete that, clear that up. That's the daily chart. You've had it's a lot more contained on the Hang Seng, but if you go over to the dailies on it's the big S&P, it's still in a rising up channel. So even if we have a couple of days where you're down a couple of hundred or so on the Dow, down a couple of percent on the S&P, it's still, there's still an established uptrend. There's not much you can do about that. It's still going up, and the fact that we were just looking at this zone through here at around 42.30, it's bounced off there, held up. Let me just delete it. I've got to have a whole lot of 42.30 is around in there. That's held. It's reacted up off and off. We've broken. You can see this little pullback. You wouldn't say it's not a downtrend. It's just a pullback. That's the overall trend up. It needs to flush people out. I mean, we always talk about this. We have the last few streams. If the market can't go up and it's running out of steam, it needs to flush some people out if it's going to continue. So it gets to the point, everything, not just your stock markets, but everything. You got your index trading, your FX, your commodities, everything. If it can't go up anymore, you run out of energy to keep pushing it. It needs to pull back, squeeze some traders out, reset and go again. Because what that does, it gets too extended. People don't want to buy it anymore. And then if you're long, you're going to start, there's going to be certain people, different risk parameters, are going to think about closing out, booking some gains, potentially. So it sort of goes through that process, pushing up, running out of fuel, pulling back to squeeze them out, finding new buyers, pushing up, until it gets to the point where, you just run out of buyers completely. You have to have a much deeper pullback, and then you get these sell-offs and things like that. That's how they all basically works. But at the moment, that's, I think, what the S&P's done. It's just had a bit of a squeeze down, and I don't think these things are going to turn until they do turn off the tap and they get interest rate rises. To think it's going to keep going higher when this whole bull market is predicated on the back of stimulus, and then they turn stimulus off, and it still goes high because they've got a strong economy. It's strong because no one's paying for their debt. It's all off the back of debt. So once they start, companies have to start factoring higher energy costs for if they've got that as an input, higher debt levels. They're going to pay off more debt. And borrowing, you're not going to be borrowing as much because you can't afford to pay off as much debt, or you can't borrow as much because the debt levels are higher. That all crimps growth, and I do think it's been factored in a lot already. So we'll see how that goes, but the S&P, it's bouncing back up. If we can make into new all-time highs, fair enough. But at the moment, it's still in that rising channel, which we were just talking about. Well, let's just say somewhere here, there. Okay, for argument's sake. The Dow, much the same. It's still sticking in that channel. I've just taken across the tops here from when we first, and it's just been a controlled move up. That's looking a lot more bullish. It's had quite a bit of sideways action, but it's, again, we've got a little minor level that's support zone through around that 33,500, which is held. And the important thing, the same with the S&P, you've got this little level in here, which is just, potentially breaking. Okay, that's the anchor of the downtrend. You've got a wave down, pop up, lower high, presses down, takes out the lows. The fact that it doesn't take out the lows very much, very high, good, heads up that, okay, if we're not going to take out that low and sink a lot further, like go through this level to the bottom end of the channel, there's a good chance that level's going to hold. And it did. We pumped straight back up, got a higher low in here. May extend up, may extend to the highs, may extend further. We don't know that yet. And the Dow's much the same. Okay. Move down, pop up, lower high, pressed into the lows, didn't go anywhere, and start to head back up again. If it's not going to go down, it's going to go back up. We've been taught the last year and a year and a half, buy the dip, buy the dip, buy the dip. Anyone that's been selling into that has been run over many times. Okay, so if you've been run over on the short side, you're going to be very hesitant about shortening again. And if you missed the dip, buying the dip a few times before, you're probably going to be a bit more aggressive with buying the dip. So it's sort of, it's kind of, we've been trained to go up. Once everyone gives up on and going short, it's probably when it'll start to head south. Okay, we'll get hit out of sidelines. Nasdaq, high debt levels going to hurt them a bit. You expect that's how the market's reacted in the past. Talk about higher debt levels, higher interest rates. Nasdaq tech stocks get hurt. Okay, but at the moment, same sort of scenario. We found the base in here, started to work our way back up. Now, I don't know what's going to trigger the sell-off, if any, of course. But I just find at these levels, it's very hard to be long, if you're not long already. And I would be, if being long, I would be tightening my risk up quite a bit. Go and look at the DAX. DAX, it's had a good run up also. It's sort of been a bit more range bound the last few weeks or a few months. Going a bit of sideways. It's been this sort of flush out, took out the lows, bouncing back again. Yeah, it's had a good couple of days. It doesn't mean it can't run into a bit of pressure up here. It's bounced off the long-term 200 MA. Yeah, there's a few reasons why it could go. You look at this kind of move previously, it smashed down, took out some lows, and went straight back up, and then straight back up, and then in a more controlled fashion after that. So it could do the same up, controlled fashion all the way up, where it's just algos are just driving it higher and higher and higher. Okay, UK, the FTSE, just pushing new highs now. They haven't got back to all-time highs yet, whereas the DAX has been pushing into it, US has been pushing into it. We're just backing off from all-time highs now, but we did push into it finally. The XJO, still rising uptrend. Now, you get on Twitter, you'll see all sorts of people when it's heading down, like, hey, this is the time it's going down, everyone be careful, but it's just turned around and bounced again. And this is the zone where I was talking about this for quite a while, just below 7,200, bouncing off 7,200, 7,180, bouncing off there, and you can see once it got this lower high, and then you started getting this chop through here, that to me, it was trying to hold up. Now, it was a bit negative through there, as in the news and everything that's coming through, it was a bit negative, but still holding nicely, and we're starting to lift now. Now, I don't think the MAs are rolled over. What I would like to see from here, if it can, to really think that we're going to attack the highs, I wouldn't think it's just going to ramp straight up in one foul swoop back up to new highs. I would expect it to go up because it's still people are a little bit negative. It needs to pull back, show that it wants to hold a high low, and then run up from there. And that's where, if it holds a high low, sort of starts sitting on the MAs, sitting on potentially this level here, 73.40, 73.50, then I think you can get a bit more bullish and start to getting some good setups. Okay, so that's that. Let's get over to the US dollar. That's what's driving the markets at the moment, and that is, we're on the daily here. So let me just clean that up. It's going to look like a mess at the moment. You can see, just minimize it. Is the charts coming through okay? I think they are. All good. So we've got this was all over the pandemic, big sell-off. No one knew what was going on. Now we know what's going on. The US dollar is going to perform better than say other central banks or other currencies, say the euro. So that's why it's getting a buying. It's getting bid up. When we're talking about higher interest rates going up, safest to be in the US dollar as opposed to euro and everything. Because with this talk about debt ceilings, all that sort of stuff, we know they're going to keep raising the debt ceilings. They can't afford not to, and it's just stupid politics, if you ask me. They just love being on the news. They love being putting their head in the limelight, and it's just a self-promote, I guess. But that eventually they're going to talk about it. The news loves whacking up in the news. They love talking about it too because it creates that fear. They've got readers. People read the news. But all in all, once they talk about your debt ceiling, we know it's not going to go. We know they're just going to leave and say, okay, that's enough. We're had enough, because it's massive issues after that. Okay, so that debt ceiling come December, it's going to rise again. But it will get to the point where I don't know what they're going to do. I just feel they're going to have to do something. But the US is trying to avoid the inevitable. I don't know. But for now, the US dollar is a good place to be, backed by the US government, who can keep printing as much as they want, as opposed to the euro, which they may turn off the tap with what do you call it? Their bond buying support. But whether they're going to raise rates is a different story. Whereas the US is going to be, you would expect, they've got higher inflation at the moment. They're going to be raising rates, and I think, like I said, just it's a better place to be in the US dollar. So I think the US dollar is going to outperform, and that's why it's pressing higher. In terms of commodities, denominated in US dollar, really should weigh on commodities, but for now they're banging high, especially energy commodities. They're going well. Copper. Let's just actually go down. I'm just going to go down the lower time frame. Let's go to the hourly on the US dollar. You've got some resistance through here. This zone in here. Whoops. but it's also just been banging around longer term. Sort of got through these highs. You get through the high you touch, you just fail off there, have a deeper pullback, rally up, go through, deeper pullback. You fail again, so that's your resistance zone. You know that. Support, it's gone into those lows, reacted up, so it's kind of like a bit of a cup and handle at the moment, which leads me to believe we're going to punch higher, which is going to weigh on the euro, is going to weigh on the pound, weigh on the Aussie. If the US dollar does go higher, I do believe I expect it to go higher, because of what we were just talking about a minute ago. So I expect to be buyers into the US dollar, and there's bigger funds that have got a long US dollar play at the moment. So that's it for that. Gold, forget about it being an inflationary hedge at the moment. It's not acting that way. It got ramped up. Everyone got excited. I was sort of looking at it. I got excited then too. Thought it was going to keep going. But then the second day, when it just took out the highs and did nothing, you sort of go, oh, that's not going to be good. I didn't expect it to come all the way back down again, but it has. So traditional reasons, everyone talks up it's an inflation hedge. It's denominated in US dollars. And if US dollars going up because of inflation, I don't see gold going up because of inflation. It's sort of fighting a dollar rally, a dollar-based rally. And if you go and look at the yen also, with the yen's been factoring the higher US dollar. It's been really strong, and it's getting a bit extended up here, and that's a key level at 114. Was it 52? It's a key high. It's extended up there, but it's sort of it's still going up. The trend is still up, and it's quite strong. So that's kind of been you're watching the yen for a US dollar move. US dollar gets dragged up with it. But they're really factoring in a stronger yen. There's no safe haven yen buying, so they're factoring in a stronger dollar, lack of yen safe haven buying because everything's up at the moment. Okay, so you just keep an eye on that yen as well. That's it. Really about commodities. Crude, it's just pushing away until something changes with the energy crisis. They tend to get that into control, which I don't think so. We could really get a good move on. Go to, that's your daily chart. So a big negative, that was just a debacle, that push into negative territory down to negative 40 as a debacle. It shouldn't have happened. It was just something that no one had factored into the systems. You can't go negative. And people got run over during that time. It's just ridiculous to think that you can buy something and have to, I don't know, they get paid for it. Well, who knows? Who knows how it works, but it just, prices shouldn't be negative there. Come back up, taking out those days highs, daily highs around 76, and their days highs from back in October 2018. We just punched through there. So we've come off a nice high low, you can see, on oil, down around 61.70, say, and it's been a nice steady trend up since on a daily basis. So yeah, it's extended. Looking at the MACD, it's extended, but it's not stopping yet. And I remember trading through that. We had the big run up on oil, I don't know, it was 10, 15 years ago. So I was selling options. I nearly got caught at the start, but once it kicked off, selling options was awesome. Selling calls, because you got massive volatility, big swings, all increases the price to premium, so you can go miles away, and you can trade them as opposed to just sort of sell them, wait till they erode. If anyone knows anything about options, you sell the premium. The more volatility, you can sell it at 50. A couple of days later, it comes back down to the 30. So you take your 20, resell the same structure, thing at 45, buy it back at 37, or 20 again, or something like that. So that's what we could be in for with crude, but it looks more controlled at the moment. We'll see where that plays out. Now, copper, I would expect to be linked into the US dollar, and that's really taken off though. I think that's just taken off through these highs. You've had this nice base that, after a while, once that starts to hold, you start to, you break out of this uptrend, you break that, but it doesn't go anywhere. You don't fade that. It just keeps holding these high lows, especially here and here. What was that, on the 21st of September, and then again later on in the 30th of September, around there, held those high lows. You know that it's going to kick off. Okay, so markets, when they correct, don't have to go down. They can correct sideways. They can be a short correction, and it's just the bullishness in the market is driving it up. So yeah, I would expect if the US dollar starts to kick off again, that may, well, it should. You would expect it's going to weigh on that rally, and you're going to get a bit of profit taken into copper, but it's still, it's at good levels at the moment. Now, I wanted to get over to just the stocks on watch. Has anyone saw that in the subscription section of the TradeTheStructure? but I've got which ones? The new watch list is up here, so we'll just quickly go through those. I've gone through, actually going a bit quicker than I thought. I'll go through those and then we'll open it up and we'll talk about anything you want to talk about. It may be the 5-minute plan again. It may be some indexes, how you trade them. It may be anything you want. So if I've said anything wrong, please correct me. They're my views anyway. So if you want to correct me, I'm just going to switch you off. Sorry, just to get in. There you go. So ASM. That's your daily chart. I think it's a daily, yep. Dailies are looking good. The trend is up. You had a good run up here. The market's got extended. You've had your pullback. Is this enough to flush out? I think it could be. It's starting to look quite good again. My biggest problem with things like this, you just flick it back to the weekly. The weekly's sort of under pressure. Okay. I'll get my old drawing tool. Okay, no, we won't worry about that just now. That's your weekly, okay? So the weekly had a good run up, big rejection here, had a bit of a move down, had a bit of a pop up. That on a weekly basis, the momentum up is stalling on a weekly basis. Yeah, it could go on a daily. There's no reason why it can't go, but I think it could be due for a pullback. Obviously, it looks like it's due for a pullback on a weekly basis. Now, if you were trading this purely off the weekly, this up here, you'd want this to hold a higher low in here. It could be over the next few weeks. If it does hold a higher low at 10, then you could drop it down to your daily and really work on it on the long side. Okay, because the way it's sort of, you can see it's extended here. I'll drop that in. Gin, we'll have a look at that, Pete. No worries. It's come down, then it's kind of reverts straight back up again. I'd rather see a bit more base, a bit more chop. That it's like when you see that chop and you see that base building, it's when sellers are still coming in, but it's getting soaked up. Here's not really soaked up. It's just like sellers are taking their foot off the pedal. It's bouncing back up, but then they might come back in and smack it down again, because that's what the weekly's sort of telling me. But if it can start to press into 10 and hold and start chopping around 10, that's going to be a weekly high low for me and looking quite good. I have to whip through these. EXR. Now that's, looking at that looks pretty good. It's had a big run up, big flush down, and it spent some time. You can see this period through here. Okay, it spent some time, it sort of popped up, went back, had a bit of a ramp up, straight back down again. All that there is just what the market's doing is buyers are starting to show their hand. They've got enough time to show their hand. It starts to come down, sellers give it another nudge. And at this stage, buyers are soaking it up and they're showing their hand and they're starting to lift. So if you're a seller at that stage, after this sort of 1, 2, 3, 4 days straight back down again, and we start to go green, then you'd want to be questioning whether you want to be short or whether if you're long, you might take the risk it's going to bounce back. And if you're trying to get out, you get out at a better price. So if you're long from here and you're going to close out, you may hold off and just see if you get back up towards these highs. I'll see where it goes to from here. Okay, but all in all, once you start getting that action, if you're a seller, you're questioning it, whether you should get out or whether you should be out, you start to hold off. And if you're a buyer, you start to chase. You're essentially starting to chase, because now we're sitting back on top of the MAs. All right, so when you're back on top of the MAs, trend is up. I use a 20 and a 50 EMA. 20 is above the 50 in a rising trend. Momentum on the MACD is rising. It's not out of hand at all, so it could easily go a lot further. So that looks good. EXR. Into you, same sort of thing. It's bouncing off the MAs. Uptrend. Momentum's in a good spot. Not a lot of volume coming through, but it's pretty good. It's been holding up quite nicely. Love LOV. No, I don't. I just wanted to say that really. It's in a prime position. You look at, I like the MACD. So when it sort of bounces off that zero line, it's kind of like it's flushed out some traders, like from a momentum perspective, but it goes sideways. When you see a sort of pop up here, the market goes sideways, but momentum comes off. It's getting soaked up. It's clear. It's getting soaked up at that higher level. Now we don't know. It's all about what sort of entry strategy you apply to the market. I would like to see sort of a bit of a pullback from here, because I wouldn't be buying it here, because this action hasn't held a clear higher low yet. We've got push up, grind down, pop up into new highs, come down to a lower low around 18, straight back up again. So it hasn't held that higher low that you want to see if you're trying to get long. You want to see it pop back down, essentially maybe just sit straight on top of the MAs, 1950 and 1925, and start to lift from there. Then you might want to get long. Okay, but for now, that action there is good. is conducive that the market's rallying. The MACD is in a prime position. We've got some good volume, you can see on the 13th, and it's eased off a bit into the highs. But if it starts to get soaked up at a higher level, then yeah, it's going to look really good. TPW, we've had a big flush down. We're back on the top side of the MAs, but a bit much the same as love. You want to see it sort of bounce off the MAs, start to hold, because you want to see, something like this comes down and it starts to hold these MAs and starts to lift again, a higher low to work off, okay? Because there's no reason it can't lift up here and come straight back down again, even though it's not a high probability, but there's no reason why it can't. Longer term, it is an uptrend, but you've got these sort of highs. This is actually probably more like it. You can see good trend up. Longer term, it's been holding. You get up here right across the left-hand side. You can see that. Yep. Right across here. Good run up. Okay, we need some heat to come out of the market. Bang, get smacked down. But it doesn't go too far, and it has another ramp up. It can't get through to new highs. Takes out these lows. But as soon as it gets through the lows, it flushes people out. It's getting held back again, back above 9. So that's this action through here, if you can see, really strong. It's really range bound. That's a great sign. After it tries to get through 9, it tries to have a deeper correction. It go into a really big sell-off. It just can't, because there's still some positive buys. There's still some longer-term buys that think it's going to go a lot higher. Okay, now we're starting to hold up here. Probably look at a higher low on the weekly basis. Okay, so all looking good for me. And the fact that we sort of taken out these highs through 14, we've come back in and we're starting to hold. I'll be looking for my daily. I just want to see if it can start to hold off 12, 50, 13, start to rise again. You've got your high low. It's worth jumping in to see how it goes. Okay. That's the way I'll be attacking that one there. CQR, yeah, it's in an uptrend. It's kind of doing quite well. There's not much to talk about that one. The reason why it's good, why I sort of do like it, it's had a big smashing down here over the, I was going to say the GFC, the pandemic. Come back up, sort of essentially chopped around sideways. You've got lower highs working in. Maybe, if it was going to go down, lower highs should have held. It should have sold up, but instead held higher lows, took out that little inside level at 4, start to take out. So we took out that level at 410, and we're starting to extend. So this, to me, is kind of like, okay, big sell-off, one leg up, pull back, consolidation for a bit, secondary leg up. That secondary leg up could grind all the way back up to 5. All right, so it's really just pull back to the MAs, look for an entry, see how it goes. RUL, same sort of thing, big move up, flush. This flush down to $1.70. After that, we've held $1.80, looking good. The longer you hold that, it's going to entice buyers into the market, and we could start to run higher from there. But same sort of scenario, you've got the flush after a good run up, doesn't go very far, and it starts to hold, consolidate around those highs as the momentum's come off. So momentum's come off because people are selling. You've got less buyers, people are selling, they're coming in, they're selling. But if the price doesn't go anywhere, there is someone or a few people just sitting there soaking it up at that level. They're not going to get concerned because they might have a target of $5 on it. Okay, they think they might have averaged in some down here. They might be averaging in some more here. You don't know. But the fact is, it's not going down. Okay, and it's going essentially sideways. So again, it's the same sort of scenario. You got momentum coming off, price going sideways. Good sign for more bullish action to follow. VCX, but to be honest, it's just the fact that we've had this big sell-off. We're holding here. We consolidated sideways. I'm expecting that to lift. So when we take out, you would expect take out that high at 178, 180. Then I would expect that to start kicking off. But that doesn't. I mean, that's not as crash hot as some of the others we're just looking at. VCX, NSR, bouncing off the MAs here, looking good, uptrend, good flush, got a bit ahead of itself, good flush. Look at the weekly. We're up into these highs, but the longer we sort of chop around up here, up near these highs, that's already come and gone. So we're just looking at some news from China. It's already come and gone, I think. Just delete that out. The longer if we can go sideways up here, consolidate, it's the same as what we were just mentioning before. A rally, if it's going to come off, if people are going to sell, there shouldn't be, and if there was negativity towards it, there shouldn't be buyers standing in the way. Buyers should bail, or people who are waiting to buy should just bail. Go and hang around on the sidelines, not bother putting their order in, and then you've got less buyers, more sellers coming in, starting to press the price lower, because if they start attacking the bids, people start pulling their bids and put it lower because they just want a better price. It's natural. If you don't get that and it starts holding these levels, it's showing strength in buying. And if it starts to consolidate, then you would expect to break higher. Which one's that? NSR, MIR, good rally. It's sort of been consolidated sideways here. MACD is prime. That's exactly what we're just talking about. momentum comes off, we come back to the zero line and then MACD, and then we look like we're going sideways. Price is going sideways, so it's showing lack of concern for the downside, kind of positivity for another rally. Okay, it is extended. That's the biggest problem with this one. It's extended, but that, you're not going to question how far it's going to go. You just got to know, look, it is extended. I probably want tighter risk than I normally would. I want more of a prime setup. When it's had a big flush and you're starting to reset at a lower level and you start attacking highs, you could probably be a bit more aggressive, but a bit wider stop and stuff like that. But when you kind of had a good run up like that, it's like anything you're trading, always question how much further can it go. Always question how many people on the sidelines ready to come in to keep pushing that market up. That's just, looking at the weekly, so looking at the daily, if you're going to take that break, say into new highs, say 410, 415, for example, you can put your risk at 370 or so. Not too much risk, and if it's going to break down to 370 and take you out after getting you in, something's not right. You just leave it, or you take your stop, take it on the chin, and move into something else. Now, WLE. It was a bit the same. It's not looking so great since I put it up. I thought that was going to pop up. It's really after today. XDiv, what was that today? Not sure. Anyway, won't worry about that. But either way, that if that continues to go sideways, what we want to see from here, if you're not in, sideways action is good. Same as what we are just mentioning. Starts to lift up through 152. It can kick off. Great. WLE, TWE. Yeah, same. Not looking so great. So it's kind of like this action here is bullish. Big pullback. And it's probably off a weekly, big run up, pullback, holds EMAs, extends up into these highs. Now, are we going to hold 1150 or thereabouts through here and rally again, or are we going to have a deeper correction? Go back to your weekly, check it out. Yeah, that weekly momentum's fading. So, when it's fading, you see you got the longer term momentum fading. It's whether or not it's going to pull back or consolidate sideways. Consolidation sideways, you just got to give it some time. Let it pull back, or let it consolidate sideways. Let the momentum start to build up again, build up to the upside, and then you want to take it when it's rising, as opposed to just buying and hoping it's not going to pull back further on you. Okay, that is what I'm on, TWE. So I'll be holding off on that one. This one looks great. 8 VI holdings limited. Don't even know what they do. Don't really care. The problem is it's got a next to no volume. So 41 grand today. Nearly 42 grand. The bids are a little bit, it's very skint on the offer. That said, this kind of price action is really good because you've got a run up, little spurt higher, pull back, consolidate, big spurt higher, pull back, we're consolidating again. So that to me looks like it's going to start to bounce up again. I probably wouldn't trade it personally because I think I want something that's got some good volume in it. And it's really on the low to no volume, you could probably say. But ideally, that price action, look at the weekly. The weekly, if I got something like that with some good volume, you'd want to be jumping in because it looks really, really good. We're holding on these weekly MAs. We've had a good expansion higher, up to 7. We pull back. We're holding back on the weekly MAs, showing some really good signs of strength. The daily looks great as well. But, just be careful. So file that away, take a snapshot, file away, draw up some notes. That's something you could refer to as a pretty decent price action setup. Pan, I can't remember. I think we had this just when Trade Setup pulled the pin. We finished up there. I'm not sure where I put my stop. It might have been at 18. I'm hoping it was 18. 19. I'll have to look at that. I haven't got that personally anyway, but it started to lift again. It's looking good. That trend up is looking really good. The weekly trend up is intact. It's probably going to. It's in a phase now where it's extending up. Then you just want to be holding the pullback. See how it pulls back to the MAs. It could get ahead of itself and really extend up. So you're not questioning it. You're just sort of following your risk management as you go. And last but not least, get my mouse back, is AVN. News today, obviously, what do they say? Okay, whatever it is, it's been selling into that today. Wouldn't be trading this now because it has extended. You want to see it reset. You want to see a higher low hold, but generally, clear cut trend is up, both on the daily and the weekly. Weekly trend up. It's just extended. But again, because it's extended, there's no reason to take it off. If the price action looks really good, you just got to know that for your risk management. All right. So any questions on any of those? I'll have a look at gin now, and then we'll see how we go. Gin. Anything else you want me to look at, just chuck in the chat. Otherwise, we'll call it a day and we'll get this up and running better next time. Figured out what went wrong with the stream too now. It's something really stupidly simple, which must be a change with YouTube. Anyway, now gin on a weekly basis, big run up, big pullbacks. You know, most of these, you know, when you pull back to the same sort of levels, back to $7 from $28, you know that a lot of people have been flushed out of that market. And that was that. The bulk of that happened. This pullback here happened before the pandemic. Well, we were hearing news about before the pandemic sell-off with the indices and everything else. It was already on the way south before that. So the summer, you know, the start of 2020 was here. We're already given back $6 and $10, $11. So, you know, was that 40% or so? Flushed a lot lower, so maybe this is a bit of an overcorrection, you know, because of the pandemic. But this move up here, the way we sort of, as a V shape, we've recovered, and then just this has been a channel, pretty much an established channel there. So if you're trading it, you probably want to be trading it on the basis of that channel, because that's what it's showing us. So bottom end of the channel, let's actually just go to, get it up here. Jumbo, there we go. Okay. Just see what it looks like. Okay, so if you're trading that, you probably want to be trading, you know, around that base, because that's what it's been proven. It's already sort of, the channel's in place at the moment. So you're trading off the bottom end of the channel with obviously your setups, with the MAs and everything working the way you want it to, I guess, or the way you trade. The way I would trade it is sort of off these MAs off a higher low. So, you know, you go back and look what's happened in the past. Probably a bit hard in here, but in here, you know, this is beautiful when you've got that kind of action there. It was about then when it confirmed, it flushes through previous lows, comes back up. That to me is a prime setup. Really nice setup. Start to lift. You know, again, another setup through here. This higher low, you can take that in there, expand it higher to the top end of the range. You know, if you're following this channel at this stage, you might take some risk off here. Secondary time when it gets up there and fails, yeah, definitely take some risk off here, or close it out altogether. It's up to you, but you want to trade it, like I said, with respect to that channel, as opposed to something that's just going up. You know, that's a minor channel there, but this looks like it's a major, well-established channel, I guess I'm trying to say. Whereas things, when they get ahead of itself, they sort of go parabolic. You can't really apply any sort of channel to that. It's not clear. But when you're doing it that way, when you're trading on that basis, you just got to understand it. It's parabolic. It's getting extended. Never underestimate, I guess, the stupidity of traders that chase it also. So you've got to give it some room to go when you're managing your risk. But you don't just trade it and close it out because it's parabolic. You let it run. There's going to be those times when I find it, especially on indexes. One of my problems, obviously, just cutting it when it's extended. I think it's extended now. Indexes will prove to you time and time again they can go harder, a lot harder than what you expect. Okay, so when you're trading it that way, it doesn't always go harder, but when it does, it's kind of I wouldn't say easy, but it's quite clear. It'll just keep going and squeezing and squeezing and squeezing. So you might go, say, just as an example, every fifth trade goes a lot harder than you expect. You might book another 100 to 200 points. I'm talking about, say, the Hang Seng, for example, 100 to 200 points on that. But what you've had to give up on by consistently using that strategy or implementing that as the other 4 trades, you might give up no, 10 to 15 points. So on average, so that's what's that? 4 trades at 15, not say even 20. That's 80 points to make another 100 to 150. So you can see how over time it works out better to let them go because you're not questioning how far it could go. You're just trying to let it run. And when it starts to run into trouble, it starts to show you signs. Yeah, then maybe tighten your risk right up, or you can close out, or you can take some off. Especially when you're trading Nexus, you take some off. And if it's in a level, if it flushes into a level and comes back down, you just close. You can close it and reset. But yeah, you don't just as it's coming down. Say, what I'm trying to say is this rally here. You go, okay, it's extended up here, for example. Okay, we extended up here. I'm going to close them out. I'm going to close it out, and then you see it just keeps going up and up and up and up, and you leave a lot on the table. Okay. Yeah, back to this one here. Okay, we've come to the bottom end of the range. You've got, it's important to take notice of these little things. You've come into a level in here. We've come in once, lower high, pressed into it, reacted up. Okay, your first pullback, you might want to start looking to buy, and then you're sort of working off the bottom end of the channel. You're working when it's on the rise, and you're sort of anticipating we're going to head back up to these highs at the very least. Even break those. Your second time around, you might break those and go to the top end of the channel up here. Okay, back up here. So that there, just say your risk is $1.16, and you can start to look, 280 or even higher than that. Okay, so risk reward, it's pretty good. Right, GLV, and then does that make sense there, Pete? But I think looking at this, it's off the 200 MA. Here, it's not prime, like we haven't anything prime like that, but we may get it. We may get this extension that holds up here and it just smashes higher. We might get that now. We don't know. But either way, you're sort of buying it when it is rising. Yeah, no worries, Polly. Cheers, mate. We'll see you next week, and I promise it'll be at 12:30 better. What's next? GLV. Oh, already got it. Hello. Is that the one you want? GLV on the ASX. It looks like it. It's on the rise, no doubt about that. Obviously, is it energy, oil and gas? Is it an ETF maybe? Is it? No. It's just a company. So it's looking good. 3.6. Whoops. Right, so that's looking good. It's on the rise. You've got a high low here. You've got a big bid zone through here. Okay, then you've got your high low pressing through there, but I would rather have to press higher and then hold a higher low at a higher level because it's showing more strength. When it sort of rallies up and you're giving back of this little leg up, you're giving back 2/3 of it. It's not the greatest of signs, but we have seen the market come straight back up again. But the problem is now you're into I'll probably discount that a bit, but just say these highs back into these highs. So you kind of extended into a level where, to me, you're either going to react off it and then head down, or we're going to pop through and just continue our merry way higher. Okay, and if you're looking to get in, you probably want to see it pop, retest, hold, go. Okay, and then get your setup because you know that it's probably going to extend that and it's just going to settle into a nice trend up. It is extended when you start looking at the MACD. That momentum, it doesn't, you don't trade for momentum, but you just realize that when it's overextended, sort of the overbought territory, you realize it's not new to traders. It's not something that people might be chasing. It's already probably had a good move. Anyone that's wanting to get long is long, if that makes sense. But when you're coming off sort of the midway, when you have these pullbacks to the zero line, what I look for on the MACD anyway, is a pullback to the zero line starts to look like it's going up. To me, there's a lot of fat with regards to momentum on the upside. And if your price consolidates sideways, great, because then it's going to really start to charge. you know that people are biased up rather than negative on the stock. So yeah, all we're really trying to do is potentially, if you're not in, I'll be given this time. I'd rather see maybe if it presses into the level, maybe failing and start to see something like this, then yeah, you start to hold a key high low on a longer term weekly basis, then it's looking good. All right, I'll probably we've got through a bit today. I think we've got through a bit. Probably what I'll be looking to do is go for an hour each time, like usual. Bit of a, like I said, balls up this morning, 12:30. I figure what the problem was now, and I'll rectify that situation for next time. So any questions? If you want to look at some indices, anything else quickly, another 5 minutes. Otherwise, I'll just call it quits there. I'm just trying to see where my charts are. It's the Hang Seng. I like torturing myself. Short here. Was it short at 40, 42, 43, 43? 05. So I got that massive bit there, which is great. I didn't trade, like I said, I didn't trade the secondary trade like I normally should, because I know that I wouldn't be able to talk. In hindsight, I could have just held it for the next few minutes, and because everything was getting stuffed up with the stream anyway, I could have held that and made a lot more. I mean, that move there, that was 30 points. That breakout there, it's 30. I think I made 35. What was it? I think 43 down to 05. So it's 38 or so. So maybe 38 points I made on that, which is great. You can see that could have easily been just into the support around 100 points on that secondary position. But like I said, too bad. But that's the strategy. I'll be working that each time. Any questions, just give us an email to TradeTheStructure@gmail.com. And then, yeah, I'll get straight back to you. So I hope you enjoyed, guys. Hope it was worthwhile. And like I said, we'll get into more and more of it. If you haven't subscribed to the website, please subscribe. It'd be great. Give us some support. There'll be a whole lot of free material, educational stuff. Not exactly like Trade Setup, but it's also free, all that content. All I ask is if you're thinking up starting an account or you're going to trade the strategy, that you trade it through TD365. If you have any questions about that, just email me. If you've got any concerns, just email me. I'll alleviate that pretty quick. I actually trade through it myself, so no issues at all. Yeah. All right, guys, we'll finish it up there. Thanks for joining me, and I'll speak to you next time. Enjoy it. Bye.